Good morning. It's Market Day Report. You ready for another exciting day? This is like going, the rapids, riding the rapids. Every day seems like we have ups and downs, and the water just doesn't appear to be still at all. Can't find any still water. Well, let's start with the overnight trade. Maybe corn was still over the night. Well, kind of. 448. It was a 4.5 cent trading range on the new crop and settled 448 up 2.25 cents. So yesterday we finished with corn in higher territory. Soybeans yesterday, kind of mixed territory. The old crop was higher, but the new crop lower. And we extend the losses a penny more, 9.76 3/4 on the new crop for beans. For wheat, higher all three exchanges yesterday, and we build on some of that in the overnight session. 558.5, 4.5 higher in Chicago. What we call Kansas City, 582 3/4, up 7 3/4. Minneapolis, the December up a nickel at 648. Cotton market under pressure yesterday, and then in the overnight session, just one tick lower at 67.74. All right, let's see what we're doing with these markets. Brian Hoops, President, Midwest Market Solutions. All right, Brian, as we start the trading day, we've had a lot of fireworks outside of the row crops.
Yeah, in fact, most of the action has been outside of the grain room. It's been in the crude oil market, U.S. dollar, stock market, of course. Livestock have been kind of crazy as well. It's probably the big news overnight. We did impose additional tariffs against China, which was talked about yesterday, and really, I think, caused that sell-off in the stock and equity markets to happen. China retaliated with a tariff of their own overnight. So they're putting additional tariffs from 34% up to 84% against the United States. We're looking at 84% tariffs now, and this trade war between the U.S. and China not going away anytime soon. The EU has also indicated they will impose their first retaliatory tariffs against the United States as well, starting April the 15th. On a positive note, we did see a private export sale announcement, 84,000 metric tons, or 98,000 actually, metric tons of soybeans sold to an unknown destination on top of yesterday's sale of corn. So we are seeing a little bit of export business start to pick back up, and that could be the case with the dollar weakening. That's one effect that the tariffs are likely to have, is a weakening U.S. dollar, which bodes well for commodities, which bodes well for exports, should bode well for gold and silver markets as well, as they respond favorably to a weaker U.S. dollar.
You know, you mentioned the crude oil market, and this is a market now down 20.7% in the past 5 trading sessions. We're down 20% year to date, nearly a $2.50 loss on the May contract, 57.09. Is it just the anxiety and the fear of tariffs, or is this more fundamental?
It's a combination of things here. The tariffs is kind of what really started the ball rolling. But, you talk about these Chinese tariffs. China's a huge importer of U.S. crude oil products. So it makes our products more expensive to be shipped into China. That means demand will slow out of that country. And then you also look here domestically, if we go into a recession, and Jamie Dimon was on Fox Business this morning talking about that very thing, that we were likely to head into a recession. That means consumer spending will start to slow down. One of the things that they may spend less on, not only eating out or these convenience items, maybe vacations, maybe driving costs, that is going to bring demand down for crude oil, and we're seeing energy prices lower. Of course, that's what this administration wants. President Trump wants lower energy prices because that helps inflationary factors. So we're seeing a very volatile market, a lot of swings in these prices here, and I think we're going to look back and see we're going through historic times right now.
Yeah, the biggest hit that we've seen in that energy space, at least over the past month, nat gas now down 24.3%, and the nat gas market lower again today. I'll pop 2 more up here. The gasoline market retreating, and this one really jumped out to me as well. talking about diesel. Again, I guess there's another side of this coin. If you're a buyer, you're getting it at cheaper rates, I guess.
Yeah, that is the flip side is, you start talking about the other side of the coin. It's always either a positive or a negative for somebody. It's the fun thing about economics. There's two sides to everything here. But, we may start talking about filling back up the strategic reserve at some point if prices get cheap enough with crude oil. That has been drained under the previous administration. So that is something that I think will help out the demand. But, like I said, this will help combat inflation if we bring energy prices down. That'll curve some of that inflationary talk and maybe keep us out of a recession.
All right, Brian, hang on. We'll take a break. We'll come back with more markets. Market Day Report continues in a moment. Well, the stock market taking it on the chin in the overnight session as we look at the Dow futures just before we ring the bell this morning, and we're seeing lower trade there on the Dow. NASDAQ has really taken it pretty hard this year, down over 21% year to date, and the S&P also lower in the overnight session. Brian Hoops, Midwest Market Solutions. From the equities to the livestock markets, we were lower yesterday.
Yeah, we probably have a little catching up to do, I think, on the cattle market, unfortunately, this morning. We closed kind of mixed in the cattle with April a little bit higher, but June lower. And then the stock market sold off in the afternoon. It's lower again here in the night session. And we're following, in the cattle market anyway, we're following what happens in the stock market almost to a T. I think, certainly consumer demand is going to be subject to what happens with the economy, with the stock market, but it seems like there's just no other direction the cattle want to take right now. The cash markets haven't traded yet, but I would suspect that if we have weakness in the futures, packers will step in and try and buy some cattle at cheaper money again this morning. We're looking at steady at best. I think cash trade, probably lower money this week, unfortunately, with the futures being down like they were. April's already holding a big discount to the cash markets, which will support that contract month, but the other ones are going to be trying to figure out and discover what price levels will that consumer demand start to come back to the U.S. And really, we haven't seen any evidence that consumers have backing off at this point in time, especially as we go into the summer and the grilling season. We know that the numbers are not going to change anytime soon. We're still going to have very tight supplies of cattle inventories throughout this year.
All right, Brian, when we see you tomorrow, we'll have numbers out from USDA, weekly export sales in the morning. We'll see you then. Brian Hoops, Midwest Market Solutions. So